both for you as well as for Heyman as well as for Rajesh. So let me take first. This one is coming in from Aarti, and she has investments in metal space, that is Tata Steel, JSW Steel and Hindalco. Wants to know what should she do with the holding, given that she's seen a downtick in this one. So this one will be for you, Heyman. And while we have one from Vishal, who's written to us from Dubai, he's saying that with Hindalco correcting his prices upwards, would it be right time to add an average on this counter, or should I wait for some more correction? He's a long-term investor, and that one is for you, Rajesh. So which one of you would want to go first on this extended metal discussion now this time around? Heyman, would you want to go ahead first?
Absolutely fine. We spoke about, Shell, you spoke about Tata Steel. We're at 866 right now. There is support just sub 850. Otherwise, the next support comes in at 782. So I have a feeling that as of now, this seems more like an intraday or a short-term bounce. We would need consolidation, stability, sideways movement, higher tops, higher bottoms, positive divergence. We need at least 5 or 7 technical parameters to confirm a turnaround. As of now, we've come up from 1080 to 840. We're just seeing a small bounce. So frankly speaking, I wouldn't rush into something like this. I would wait for stability on the weekly charts, though we may be slightly late behind the curve. We can't get tops and bottoms, but I would wait for Tata Steel and the other stocks he mentioned. I think it's still too raw, too nascent. Like I said, I'd wait for weekly green shoots to come in, and that doesn't look like happening in a jiffy.
What's your take on Hindalco? Do you think that it is right time to go ahead and add an average at these levels? No doubt you said that Tata Steel, JSPL are the ones that are whose valuations look attractive. But what about Hindalco?
See, Hindalco is also looking good fundamentally, I would say. The company is on expansion spree, even in that their international subsidiaries are doing well. But at this point of time, adding more, I would say, wait for some stability to come, as Heyman said. It's better to have a look at steel stocks if you are looking for a medium to longer term horizon. But for a short term horizon, I would wait for adding anything else at this point of time. For existing stocks, one can continue.
Okay, Heyman, I'm going to come to you for the first query, and moving on from the metal space. We have a query coming in from Ramesh, and this is on Tejas Networks. Now, they're asking whether they should average Tejas Networks. They bought 20 shares at 535 rupees per share, or should they be waiting for some time?
8.5 months and counting, Vinny. Range is between 360 on the downside, 570 on the upside. There is no directional bias, but if I look at the longer term charts, it seems to be a retracement pull of consolidation in a bull market. The move up to this 8.5 month sideways move is bullish. So I would take this that this is more of a continuation pattern. So if you want to average, I'd suggest somewhere between 360 and 380. But okay, it's far away, but till it doesn't take out 570 on the weekly or the monthly charts, it's going nowhere. We've had a run up from 30 to 560, so those time. Actually, after 8.5 months, still no signs of the cool off coming to an end.
Right, this one is coming in from Ravi. He's writing to us from Chennai, and he's saying that he has 3,000 shares of Oil India, purchased at 104 rupees per share. He's holding this for over a year. But he's asking that given that we've seen that correction in the Vedanta share prices, does it make sense for him to actually sell Oil India and instead look to buy Vedanta? He's a long-term investor. Do you think that this strategy makes sense for the longer term, Rajesh?
The longer term, yes, because we feel that whenever this Russia-Ukraine things comes to a stop or something, for any reason whatsoever, crude prices are going to correct. And once crude prices correct, there will be correction in stocks like Oil India or ONGC. But at this point of time, I won't suggest switching to Vedanta. Stick to Oil India. When crude starts correcting heavily, maybe under $100, then one can look at booking profits, not at this point of time.
The next query is on Redington, and this query is coming in from Manoj, and this one is for you, Heyman. They're holding 2,000 quantities of Redington at 155 rupees per share. Can they average now? And they have a 1-year target almost on this one.
I'll break this up into two parts. I would request that they increase the time frame, the 1 year time frame, if it's possible. If they can increase it to 18 months or 24 months, that would be better. We had a prolonged sideways distribution, meaning between 180 and 135 on the downside. Prolonged meaning once again it's taken its own 7-8 months sort of a time frame, and now we've given a downward breakout. So one, I don't think one needs to rush into buying. Averaging. If they want to, once again, not exactly like an SIP, but in bits and pieces. The first support comes in at 105, and the second support comes in at around 90. So these are the two levels to keep in mind. The move from 30 to 180 is being now corrected. I don't see it making a new high in the current calendar year. So it's going to take time. Levels need to be kept in mind.
Okay, this one is coming from P. Subramaniam, and he's also writing to us from Chennai, and he's saying that he's bought 150 shares of PVR 3 months ago on the merger news with Inox Leisure. Now he wants to know, does it make sense for him to continue to hold on to PVR, or should he look to book loss? What's your take on this one? Rajesh, his buy price was 1,930 rupees per share for PVR. Do you think that he should book loss?
See, rather I would suggest a strategy where he should switch from PVR to Inox, because the merger ratio is 10:3. And if you look at the valuation at this current market price, Inox is trading at a discount to the merger ratio first. It's a debt-free company second. They have expanded, they have opened some new screens also. So that's another positive point. So all in all, I would say continue with your holding, convert into Inox, and wait for the merger to take place.
Okay, Hemant, coming to you. Next query is on ONGC. Omkar is saying that they bought ONGC at an average price of 178 rupees per share. Mid to long-term view coming in on this one, should they be looking at what level should they be looking to average this one?
We've had a nice move. We're on the cusp of entering a longer term correction, meaning most of the monthly mechanical indicators are looking wobbly. We've been down for 4 months in a row from 195 to 130. Needless to say, there will be a corrective bounce back coming in. I wouldn't be very sanguine about averaging right now, especially with a longer term point of view. On this recovery, if it doesn't make a new high, I'd say 80% it doesn't look like, then 6 months are gone in terms of a time price correction. So I would wait a bit, wait for a recovery, let it come down, and then if it's around 125, that's the time frame, and this whole thing would play out over the next 8 to 10 weeks. So one, no averaging now, makes a lower top, comes down, that's the time to look at, and that would push his investment horizon back by at least 12 if not 18 months.
All right, this one is coming in from Pramod AS. He's writing to us from Thrissur, Kerala, and he's saying that he's holding HAL and LIC in small quantities. He's saying he would like to invest about 5 lakh in these stocks, but he wants to know, is it the right time to invest in HAL and LIC? Increase his holding basically, and his horizon is 3 to 5 years. And if not these stocks, then where should he look to put his money, Rajesh?
See, I won't suggest adding both of them at this point of time, because as far as HL is concerned, they have got good orders, new orders are pouring in, but it has run up quite a lot in the recent past, so the valuation looks stretched. So no point adding it at this point of time. Maybe a 20% correction would be a better levels to watch out for. As far as LIC is concerned, fundamentals are very strong. It's one of the largest insurance player in our country with around 70% market share. The AUM of LIC is larger than the entire AUM of the entire cumulative AUM of the entire mutual fund industry. They have a whole lot of properties, but again, there would be a whole lot of selling pressure at every upticks because of retail getting stuck into that. So avoid these stocks at this point of time. If you want to invest new money, I think a better bet would be Reliance or HDFC Bank. Even ICICI Bank looks better.
Rajesh, I'm going to come to you again. We have a query coming in from Neha. Now, this is more of a broad-based query. She's asking about the auto and the capital goods space, but a lot of analysts are now turning quite bullish. Could you suggest any stock coming in either in the auto or the capital goods space at the current price? How are you looking at these spaces?
See, metal price, as we discussed, are melting as in a furnace, and that's good news for auto stocks. And if you look at the order book position, they have a waiting time of on an average of 3 to 6 months in almost all the models. So it's good time to look at auto stock, but have a time horizon of 12 to 18 months. And if I have to pick some stocks in four-wheelers, the first choice would be Maruti. And in two-wheelers, it would be Bajaj Auto. Bajaj Auto, especially because they may be coming out with some buyback shortly. They have good export numbers. Around 2 lakh vehicles are being exported even in this market every month. They have around 18,000 crore in cash in the balance sheet. All in all, it looks good for Bajaj Auto.
Right, this one is coming from Manikanandan from Kerala, and yes, he's been writing to us, and I'm very sorry I have not been able to take your query, and thank you for the anniversary wishes that you've been actually consistently wishing us. He wants to know whether he can buy Galactico Corporate Services and Ajanta Soya for the long term. Rajesh, I'm not sure if you try either of these stocks, that is Galactica Corporate and Ajanta Soya.
See, the first one we don't track, but Ajanta Soya, I don't think it's good idea to collect enter at this point of time when you find a lot of good names, even in the frontline stock correcting by 30-40%. Why go to these kind of stocks? Go to stocks like Reliance, HDFC Bank, ICICI Bank, which I've suggested some time back.
Hemant, the next query is coming in for you, and this is on Zenza Tech. This query is from Vaibhav. Now, they are holding Zenza Tech at 395 rupees per share. Should they be buying or averaging here at current levels? If not at this price, when should they be looking to average this stock? And they have a 1-year hold period.
Well, at the risk of sounding repetitive, that time period needs to be extended just a bit, because we've come up from 580 to 250. We'll consolidate, give a bounce back, it just come down, test the earlier bottom, then go up. So this whole thing will play out for at least 8 to 10 months, and then we'll see a more structured move coming. Coming back to the main question, in terms of support levels, decent, if not strong support comes in at 220. I think there is quite a lot of solid long-term support. Between 200 and 220 is very good longer-term support. So this is the level our viewer can keep in mind to average. Till we don't give a weekly close about 320, the stock continues to flounder, nothing much expected. Patience is the key, but these levels is where they can average.
All right, on that note, we'll slip into a break on this edition of Buy Now, Sell Now. Viewers, don't get worried. We will be back after this break and take all of your queries, so don't go anywhere.
Voices you don't want.
Perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy, only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on.
Welcome back, and you're watching Buy Now, Sell Now on ET Now. Let's keep it going with your stock-related queries. And Rajesh, the next query is coming in on S. Chand Company. I don't know if you track this regularly, but Shiva has this query saying, how is this looking fundamentally? What is the long-term view coming in on this stock? They've not given any buy price or anything of this, but would this be a good company to hold on to?
Publisher which publishes book for secondary schools, and recently they have tried moving into digital also. They have bought some smaller companies, acquired smaller companies for their expansion, but all said and done, the company has done nothing since its listing, and it has been stagnating at a very low price with no volumes at all. I don't think it makes any sense to enter into these kind of stocks. If somebody wants to be in educational related sector, Navneet would be a better bet. But still, I would say don't enter into these mid-cap names at this point of time. A better bet would be the large-cap names like I have suggested, or even into mid-cap, one can look at PSE, IRCTC, or a Tata Power for better returns.
This one is coming from Anjali. She's writing to us from Nasik and she's asking about CESC. Purchase this counter at 66 rupees per share, did not book profits at 92. Now, what should Anjali do with the holding in CESC? She's a long-term investor, but do you think it was a missed opportunity, Rajesh? Because the stock currently is hovering around 66, 68 rupees per share. It did go up till 90 rupees. So what should Anjali do now? Do you think that CESC, if you're a long-term investor, nothing to worry about?
See, your funds allowed, it's a buy at this point of time. It's doing very well. It's trading at a discount to peer group companies, trading at less than 10 times earnings. It has it's an integrated power company with our distribution, transmission, everything under its belt. Even its subsidiaries are started doing well. If the Bharatpur project is doing well, I think it's a buy at this point of time.
Okay. And the next query coming to you, Rajesh. We have a query coming in on Polycab. Now, Kaji here is holding Polycab at 2,600 rupees per share. They sold this. They were holding it and they sold it at around those levels, and now they're looking to re-enter. Is it a good time to re-enter?
If you're a long-term investor, yes, because in the short term, it's very difficult to predict. It's a very volatile counter, but long-term is very good. If it is into FMEG, fast-moving electronic goods, they were into wires and cables. Recently, they have moved into fans and other consumer durables. I think it's a very good company to hold for a long term.
All right. The next one that is coming in from Monica, and Monica is asking about IDFC First Bank, a long-term holder. Average buying price is 40 rupees per share, and she has about 38,000 shares. IDFC First Bank, Rajesh, how does it look to you?
I think one should get out of this stock at any given opportunity. Wait for a good opportunity to get out. No point in holding to that stock. The stock is not performing. The NPA is on a higher level, although this quarter numbers were a little better. But we have better choices in the private banking space at very attractive prices. A ICICI Bank or a Kotak or a HDFC would be a better bet.
Heyman, the next query we have is for you, and it's on SCI. Now, Sunita is holding SCI at around 82 rupees per share. What is the short to mid-term view coming in on this one?
Mid-term view is corrective. We are in an intermediate correction, which probably hasn't played itself out. Support is at 90 and 80. Short-term, an oversold situation might lead to a dead cat bounce. Otherwise, no, the correction is still on. I don't see major medium-term stability before it sort of takes. Okay, it's 80, between 80 and 90, but 80 is the level I would be more comfortable with.
This one is coming from N. Chandrasekharan. He's writing to us from Chennai. He's saying that he's holding MTAR Tech, 200 shares at an average price of 2,100 rupees per share. He's saying that he can hold on to for one more year. So he wants to know whether he should average at the current levels or wait for some more correction. And also, what sort of a target should he look at for MTAR Tech in the next 1 year? What's your take on this one, Heyman? A lot of questions bundled in one.
Well, honestly, there's not too much of data. There's a little bit of paucity of data. Ideally, at longer the data, that much more longer term view I can have. Currently support at 1250. Progressively lower tops and bottoms since it's peaked at 2550. If it doesn't stop at around 1250, I think 1150 is the next level one can look out to, and 1150 is major support on the longer term chart. So I think I would wait for 1150. We need a close up of 1545 either on the weekly or on the monthly chart to look at the first technical positives. Once again, I have limited data, so that's the caveat. But yeah, these are the levels one can keep in mind. Oversold, but no reversal yet on the horizon.
Actually, MTAR Tech is a relatively newly listed entity also, so that's one of the reasons why also you may not have a lot of data on this particular company. But Vinny, which is the next query that you have?
Okay. Rajesh, the next one we have for you, it's from Kaustubh, and He wants to know the long-term fundamental view coming in on Crompton Greaves at current market price. Should they be looking to enter the stock?
Yes, one can enter the stock. The company has good product portfolio. They have change of management. I think the long term looks good. One can continue to hold, even add on dips.
Next one is coming from Kumar. He's writing to us from Tirupati, and he's saying that he has Titan, about 70 shares, which he's purchased at the levels of 2,500 rupees per share. He wants to know whether he should continue to hold on to it or sell this particular counter. What's your take on this one, Heyman? Titan, definitely a strong rally on this in this counter today, but what should Kumar's strategy be?
We seem to have, or are in the process of posting a near-term bottom, 1900 almost yesterday and 2078. So 1900 is a level where I believe we should be seeing decent stability coming in. For the medium-term picture to improve, 2300, the recent swing high needs to get taken out. Long-term chart seem fine, but we walked into a correction of a greater degree. I think the stock has entered a longer-term corrective phase for the next 8 to 12 months. Short to medium term, downside limited, especially if 1900 doesn't break. Not surprising if we come to 2200 in the next 3 to 4 months.
Gujarat Ambuja Export is the next query on the stock, and this query is coming in from Sukanya. Now she wants to know whether it's a good time to buy this at the current price. Heyman, what's your view coming in? Mid-term holding period is what she has.
Oh, regret side. Track Gujarat Ambuja Exports.
Okay, Rajesh, do you have any view coming in on this one?
See, adding at this point of time wouldn't be recommended. If somebody is holding, one can continue to hold. The numbers have been good in the recent past, but I think it's would be a tough task to continue that kind of performance in the near future. So it's better not to add.
All right, this next query that I have is coming in from Sushil Kumar from Trichy, and he's asking about Sun TV. He's purchased about at a price of around 540 rupees per share, about 100 shares 8 months ago. He wants to know whether he should hold or average it, and what sort of a target should he look at if he is supposed to look to exit this particular counter. Heyman, what's your view on Sun TV? How is it looking on the chart? Time to hold on or average or sell?
I would say a sell on bounce, Cheryl. There's been significant underperformance. We peaked at 1100 somewhere in 2017. We went to 320. Most of the stocks, including the Nifty, posted a fresh all-time high. And we haven't even retraced 50% of the fall. So, abysmal performance, which doesn't seem to be, it doesn't look like it's going to shrug it off in a hurry. Support at 407. Near-term upside above 450. Ideally a weekly close. We can expect 480, 500. That's the level I think he can exit, because I don't see it going anywhere. And even in this situation, the monthly picture has turned a bit negative. Some of the major mechanical indicators have even crossed over sales. Check.
Okay, and now it's time we start our rapid fire round, and let's start quickly with the stocks. First one, Rajesh, coming to you. Your view coming in on Balmer Lowry, and KJ Singh has bought this at 106 rupees. Can they buy more at the current market price?
Of course, one can buy it if one wants to be on a safer side. Balmer Lowry Investment, that's a holding company of this, would be a better choice.
Okay, this one is, I don't have the name of the viewer, but he's asking about Sona BLW, purchase at 770 rupees per share. What should he do, Rajesh?
It's one of the largest EV player. The order book is quite towards EV play and what's the 10 top ancillary companies. Buy.
Okay. Heyman, Raymond is the next stock. Pradeep Kumar wants to know how is this looking like? What is the target for this stock in the name?
Short-term oversold, support at 840, walked it to a correction. I'm not sure how much of a side there is, but if you go below 820, we see 950 and 980.
Okay, this one's from Shreya. She's writing to us from Kerala. She wants to know whether she can buy Ugar Sugar at these levels. Rajesh, do you think it's the best bet for the long term in the sugar pack?
In sugar pack, the better bets would be either Balrampur or EID Perry. When Andhra is a better bet. Avoid Ugar.
Hemant, this next query is coming in from Venkateshwaran and it's on Ashok Leyland. They bought this stock at 80 rupees 4 years back. Hold or sell?
Sell between 140 and 130.
Okay, Denny from UK is asking about pharma stocks. He's holding Lupin 1000 shares at a price of 655 rupees per share. Do you see a turnaround in this one? No doubt it's gaining today. What's your take, Hemant?
Support at 580, medium-term turnaround.
Okay, and with that, we are absolutely out of time for taking your viewer queries for today. Thank you so much, Rajesh, as well as Hemant, for joining in with us on the show, giving us your expert views as well as our viewers. And viewers, don't worry, we'll be taking more queries tomorrow as well, so keep sending us your queries. But with that, we'll slip into a very short break. Stay tuned in for more updates on the market on the other side.
The deliberation the committee was doing, and you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.